Patrick, take it away, my friend.
Okay, awesome. All right. Well, thanks for the time, everybody, and letting me to be here. As Dave mentioned, relationships are everything, and it's no different for us here at Marshall Reddick. So, um, looking forward to working with everybody. My name is Patrick Prunty. I'm the director of private lending with Marshall Reddick, kind of the senior team member here. It seems crazy to say, but just had a 17-year anniversary with the business. So I'm proud of that, and I really love what I do. I get to help investors kind of examine deals all the time, and I get to see how they work from the inside out. So before we dive into the private lending aspect of Marshall Reddick, I just want everyone to understand that we do some other things besides the private lending. So I have kind of the Marshall Reddick footprint on the screen right now. These states and areas that are highlighted are the locations where we hold our own brokerage license. We have a brick and mortar office in each of these areas. We have real estate agents to help people buy and sell. We also do property management in all of these offices with our own W-2 boots on the ground and vendors and so on and so forth. So if you need help from a brokerage or a property management standpoint, feel free to reach out on that front. That's a different department within Marshall Reddick, but nonetheless, those services are available. Those are not the same markets that we lend in, but I'm going to get to that. Now, from a financing standpoint, whenever possible, obviously go with the bank, but there are so many niche scenarios where the bank is just ridiculous and you just can't get a deal done. I'll go over some of those scenarios as well, but you go private when necessary. And I think more and more as time marches on, the bank is it's becoming outdated, and their guidelines, the Fannie Mae type stuff, it doesn't work for the speed in which real estate is done today, especially in a little unorthodox method, buying distressed, fixing up, bridge loans, flipping, new construction, infill, you name it, it's all available, but you just can't get it done with a conforming or a conventional type loan. So when necessary, go private. Now, specifically, let's talk just some rates. So, we offer some permanent, some rental type programs. I'm going to spend less time on that today, but we are under 6% in terms of that interest rate. From a flip, renovation, or BRRR type standpoint, we're at 8% on the lowest. Obviously, those are the lowest interest rates, and they increase from there depending on the amount of leverage that you need and the type of deal you're doing. But these are very competitive rates in the private space. Going back now in terms of our footprint on the lending side, these are simply the markets in which I'm very comfortable. I do a lot of loans in each of these markets. I don't have a hard stop, however, across the nation. There are some states that I will stay out of, a lot of those on the eastern seaboard, and some others that have some prohibitive lending guidelines or prohibitive foreclosure type laws. So again, these are just simply the states I'm very comfortable in, but they are not, the other states are applicable for the right deal. Logistically speaking, in terms of a traditional or conforming conventional type loan, we do all of those things. If you need a pre-approval letter, no problem, we can do that. And we customize those on the fly, very professional, to the to the property address, to the offer amount, right? Help you get the best chance of getting your offer accepted. We obviously take a loan application. We provide you with a loan estimate, very detailed, so you understand what your closing costs look like, what your cash to close looks like. We're going to have the supporting documentation, your promissory note, your deed of trust, or your mortgage, all of those types of things. We obviously work with title and escrow. We communicate with agents, third parties such as appraisers, inspectors, whoever necessary. So logistically similar to traditional type lending, but the Marshall Reddick difference boils down to obviously customer service is number one, right? You need to know that you're going to get me or one of my team on the phone when necessary, or responding to a text message. And that's not just within the 8 to 5, because nobody does residential real estate between 8 to 5. It's done in the crack of dawn. It's done late at night. It's done on the weekends, right? So we understand that as we're investors ourselves. So, we accommodate that. Don't be shy. Reach out when you need to. Obviously, speed, very important. Some of the deals I've done for Dave, we're closing in 7 days, right? You need to give yourself the best opportunity to get that deal, whether that's off market, whatever it may be. So our renovation programs, which I'm going to dive into, speed is definitely a necessity, and we can get them done. If we need to go sooner than 7 days, we can. We prefer to have as much time as possible. Collateral based. I'm not going to ask you for tax returns. I'm not going to ask you for income documentation. All of that kind of stuff is irrelevant to collateral based lending, right? We're interested in the asset. We like the asset. We like the loan to value. We make the loan. Not a lot of red tape. Okay, from our non-conforming standpoint, we're talking literally no doc. I kind of touched on that a little bit, but it all boils down to the asset. And we're extremely competitive when it comes to those rates and terms and loan to values. And I'm really going to dive into those. I'm going to give you some scenarios and understand that those scenarios I'm giving you are kind of the out of the box rates and terms. Being a relationship-based lender, those are certainly not the terms that Dave and his team borrow against, right? After you prove yourself as a reputable borrower, you get through that first, second, third deal, we loosen up the guidelines, right? Loan to value increases, maybe potential to defer interest payments, maybe getting cash out of closing. Lots of different things that you as a real estate professional trying to build your business, you need from that capital partner you're working with. We have no tie to Fannie Mae, Freddie Mac, or other government guidelines. We can literally do whatever we want. All the loans we make are business or investment purpose loans. And what does that mean exactly, right? That means that they're for investors only, right? So strictly non-owner occupied, strictly collateral based, and strictly residential. Multifamily property, no problem, right? We're okay going above 4 units. We're not going to be your 100-unit apartment building lender, but 15 to 20 units, something of that nature, completely doable. But mixed use or industrial or something like that in terms of commercial, we don't play in that space. It must be residential in terms of you have tenants that live there and reside in the property. So we have loan programs for literally every type of niche situation you can think about. And after you get through, as I mentioned, the first couple of loans, always the hardest, while you're building that relationship, we can customize a program to any type of situation that's not already offered. So we offer programs that are, going rental or permanent. I'm going to spend less time on that today, more time on the renovation or flip, or those folks trying to build a rental property portfolio. You've referred to that as your BRRRR, or sometimes I guess they call it BRRR. I'm not a Bigger Pockets guy, but I get a lot of calls from Bigger Pockets using that language. So I've learned from, talking to people all day, every day. We also offer some interesting bridge and transactional type programs. And it's so cool as well from the new construction side to see, as distressed inventory has dried up since the 2008 recession, less of those available. We're starting to see a lot of entrepreneurs, flippers go in and start building ground up as another way to make a buck in the real estate game. So we offer some programs to support the new construction financing as well. Now, all the programs we offer, before we dive into them, are eligible for purchase, refi, or cash out. Right, so let me give you an example, right? So I support some teams that are buying at trustee sale or sheriff sale. And obviously you need your own cash on the spot at the courthouse to do that, or whether it's auction.com if it's a bank owned, a live foreclosure deal. So you'd need your own cash to close. But I have teams that do that and then immediately come to me for cash out, basically get their capital for the acquisition back in their own pocket within 10 to 14 days, as well as the renovation dollars to stabilize that asset. So know that all programs I'm going to show you are available for these 3 different scenarios. Also understand that we offer non-recourse loans. right? This is an important factor for those self-directed retirement account borrowers, that is becoming more and more popular. Self-directed IRAs, solo 401ks, who may be doing some flipping, maybe, doing some BRRRR methodology there. So we do offer specifically those non-recourse loans. Now, keep in mind, however, our non-recourse status is only available for self-directed retirement account borrowers. I'm willing to make all the loans that I'm going to show you to any borrower, LLC, trust, corporation, all of those entities are fine, or an individual, right? But you don't get non-recourse status unless you're a self-directed retirement account. Now, I'd like to make a delineation there, is that because my loans are recourse, that doesn't mean I'm asking for a personal guarantee. And Dave can attest to this, right? He uses an LLC, has several different LLCs. I'm fine making a recourse loan against the LLC, which simply means that there's recourse in the event of default against the assets remaining in the LLC. That does not mean that Dave is personally signing a personal guarantee for his personally owned assets. And I certainly can't pierce the veil, terminology used to, get the principle behind the scenes. So just know the difference between non-recourse, which is legally required for self-directed retirement accounts. But again, all programs eligible for any type of entity as a borrower without personal guarantee. So a no-nonsense collateral-based approach, right? Again, these business purpose loans are no doc. There's no credit check. It's irrelevant, right? We're not looking to verify income or employment. Irrelevant. We're not going to ask for your schedule of real estate owned or try to dive into your tax returns and the corresponding documentation. Again, it's about the asset. It's about your cash position. It's about whether I think there's a good upside on that property. It's about my relationship with you and how sophisticated you are, how I feel about you in our initial interview, that type of thing, right? So these are the items here are irrelevant to the collateral-based lending, which are the bane of the conforming or bank type lenders. Like all they care about is the borrower. They care literally nothing about the asset. So what is relevant in the collateral-based lending world, and specifically loans offered by Marshall Reddick? Well, cash for the down payment and reserves, right? Cash is king. I am going to ask you for bank statements, but that's about it. So if you're going to be borrowing in the name of an LLC, you better have a bank account opened in the name of the LLC, okay? The value of the property, right? If you're just picking it up at a smoking discount off what the current market value and what the after renovation value is, good. That's going to help. The cash flow, and now this item 3 is really more towards the rental type loans, not the renovation type loans. But cash flow and debt service coverage ratio are important, okay? And the borrower background and experience. If you don't have a good background in terms of deals, or you don't have that experience, that's not a deal breaker, but I'm going to be more conservative if you don't have a good resume to show, right? But I'm going to help you build that resume and help you build those types of relationships so that you can build your business and knock it out of the park. So let's talk about some programs specifically, but pop quiz first. I want to use my self-directed retirement account. I got 10 conventional mortgages. I'm self-employed or I'm retired. And if you haven't guessed already, I'm kind of leading up to the punchline about what are these scenarios. I need a low loan amount, under 50,000 perhaps. I want to use my LLC or corporation. I need to close in 10 days. The property needs a lot of renovation, or the bank's just simply crazy. If you haven't guessed, again, these are all scenarios when private financing is needed, right? And again, we support all those different types of niche situations where the bank just can't help you. All right, now is the meat and potatoes. What type of programs do we offer? Now, always stay up to date on the latest available rates, terms, loan to values, etc., right on the Marshall Reddick website. And I just don't understand why more lenders don't do this. I feel like it's maybe a little bait and switch or something of the sort, but I don't find that lenders just publish their rates and terms. It's like they want to get you in the door and on the phone before they tell you what they can offer you. We don't take that perspective. So if you visit the Marshall Reddick homepage and you just hover over borrow and you click on loan programs, you're going to find all right there in plain as day, no account or whatnot needed. What do we offer? Okay. And so now let's talk about those renovation type programs. These are the types of loans that I have made to Dave and to his group as he moves around the country and is looking for those quick close, high loan to value, of course, then high interest type programs to help him take down those assets quickly. Here is the rate sheet. And again, available for download on the Marshall Reddick website. And again, these are the rates and terms, off the street. Dave doesn't borrow at these terms. He gets a little bit better than that. You can too, but you must first build the relationship and you must prove yourself as a reputable borrower, because flipping property or BRRRR is hard, right? And I'm not in the business of losing money, right? I want you to make money, but if someone's going to lose, it's not going to be me. And that's why I utilize these programs, right? I'll loosen up those guidelines when you prove yourself as a reputable borrower. Now, diving in specifically, all of these are on a 12-month term, right? If you need more time, an extension can be done, but you get 12 months. You don't have to hold the loan for 12 months, but you don't get more than that unless you need an extension. Okay, these are interest only. Now, I have some specific programs where I can offer deferred monthly payments, but not for your first few loans, right? Dave could speak to that. I offer many loans to him now where he's paying no interest, no monthly payment during the term of the loan, but you got to build that relationship first. So off the street, off the cuff programs, you will be making a monthly interest payment. The rate and the APR, I get asked that question all the time, right? Well, the interest rate is the note rate. That's what's going to be specified in your promissory note. But if you see the loan fees box down in the middle of the right page, right, I as a lender am required to publish what the true cost of the capital is. So the APR, the annual percentage rate, is simply the true cost of the capital when you factor in the loan fees and express the loan fees along with the interest rate as a percentage, okay? The monthly payment here, this is based on a $100,000 loan amount so that you, on the fly, if you're borrowing 50, divide that number by 2. If you need to borrow 200, multiply it by 2. That would be your interest payment, again, based on 100,000. Quick, speed, absolutely necessary. 10 days is kind of the standard and the norm. If we have more time, great. If we need to go quicker than that, it can be done, but it gets a little dicey. No appraisal. That's unique, and that's one of the reasons that we're able to close these loans so quickly, right? So our short-term renovation loans do not require an appraisal. I have an underwriting team. I have an analyst assigned to each loan that comes in the door that does that BPO or that CMA, right? Broker price opinion or comparative market analysis. They're not licensed appraisers, but they're just as good or better and reasonable than an appraiser. So we're going to do basically an appraisal, but it's going to be done in 24 to 48 hours, giving you a down and dirty opinion of after renovation value that's extremely important to the loan amount you can get under these scenarios. Okay, there is an interest guarantee, but it's really not important. Nobody borrowing these short-term 12-month loans takes down the loan, gets the property renovated, and gets it sold or refinanced inside of 3 months. It just doesn't happen. But just do know, if you take this down and you decide to wholesale off the property at, say, day 75, you will end up with a small prepayment penalty of 15 days worth of interest. As long as the lender gets 90 days worth of interest, you're good. After that, the interest is just a simple per diem, non-compounding, easily calculated interest. Important to know, different than a bank, right? The interest accrues on the full amount at funding. So this would be important and applicable to the third program above, the 12% interest rate, where I'm lending more than the acquisition price and therefore holding funds back in escrow. If you borrow from a bank, right, like a credit line or HELOC, right, they only charge you interest on the amount you borrow. I unfortunately do not have the ability to do that. I pay for my capital too, right? So when I borrow money, I pay on the full amount from day one, even though there may be funds held in escrow. So keep in mind when you're evaluating these programs. Okay, loan to value, very, very important, right? And I get questions about how these scenarios work every day. That's why I'm taking the time to break them down for you. So note that there are two requirements, right? There is a percentage of acquisition loan to value, and there is a maximum under any scenario. The maximum allowable LTV will be 70% of the underwriter's opinion of after renovation value. That'll become more clear as we get into these individual scenarios. Now, requirements for new borrowers, we talked about that. The third-party home inspection, you don't have to have that. I encourage you always to have that, but that's not a deal breaker. I do encourage all of my borrowers and anybody doing real estate, however, to get a third-party home inspection under all scenarios. Whoop, went too far there. Okay, so note the 25, 50, and 100% renovation holds required for each of these programs. Program 1 being the 8% interest rate, Program 2 being the 9% rate, and Program 3 being the 12% rate listed above at the top of this rate sheet. Okay, let's talk specifics. If you wanted to take out a loan from Marshall Reddick and you wanted to do it in scenario 1 at 8%, okay, how does that look? $100,000 acquisition, $40,000 renovation, $200,000 after renovation value. And I will use these numbers for each scenario as I walk you through these, okay? In program 1, if you want to borrow at 8%, you will have a large down payment, okay? So you will have $70,000 would be the maximum allowable loan, right? That's 70% of acquisition, and it ends up being 35% of ARV, okay? I don't get a lot of people borrowing at this program, but some do. Your down payment would be $30,000, right? That's the difference between your loan amount and your acquisition cost. You have your closing costs. The $3,000 number includes the loan fees paid to Marshall Reddick and the title and escrow costs. You would have to contribute some of your renovation budget. Remember, in this scenario, the renovation budget is $40,000. Okay, so I need you to give me $10,000 of that up front. That's 25% of your renovation budget, which you can see down at the very bottom of the screen here. I've got still highlighted for program 1. So total cash to close on this deal with this loan program would be $43,000. It's your 30 down plus your closing cost plus your initial renovation hold. Now keep in mind that $10,000 you're putting in that portion of the renovation, you get to use that on the renovation, and I will give it back to you when you've gotten the deal 50% complete. Now, the total cash to complete this deal, right, is going to be $73,000, which is just simply your down payment, your closing costs, and your renovation. So in this 8% program, I will lend only 70% maximum of the acquisition. You will need to cover the renovation 100% out of pocket. Next, let's talk about the 9% program. In this case, right, again, I will use the same numbers. 100K renovation, or excuse me, 100K acquisition, 40K renovation, $200,000 ARV. In this case, I will lend 95%, pay a little bit higher interest rate, but no big deal. I get a lot more folks borrowing using this program. This is 95% loan to acquisition, 48% loan to ARV. Your down payment's only $5,000 in this scenario. Your closing costs went up because your loan amount went up a little bit. And in this case, I need, per guidelines, again, lower portion of your screen here on the rate card, right? 50% of that renovation budget I will need from you at close of escrow. Again, you get that to use towards your renovation as it progresses, but I need you to give it to me up front. Okay, so that's 50% of the $40,000 renovation budget needed for this particular hypothetical deal. Now, what's your cash to close? Substantially lower than the 8% program, right? You need 28.5. That's your 5,000 down, your 35 closing costs, and your 20,000 renovation escrow hold. Now, the total cash to complete this deal, 48.5. Again, it's the same deal we're talking about. We're just walking you through the different scenarios. Okay. So in this one, you need 48.5, which is your 5 down, your 35 closing costs, and your 40,000 renovation budget. Going into the most popular program, right? Everyone wants to use the maximum leverage possible. The interest rate is higher because the risk to me as the lender is greater. So how does this work? I literally will lend you 100% of the acquisition and 100% of the renovation, so long as the total loan amount is not more than 70% of underwriter opinion of after renovation value. How does it look? Okay, well, before we go any further, right, that's why those reminders are there. Keep in mind, in this program, we're lending against the renovation. So all of the draws, the renovation or construction draws you will take on this loan are done in a reimbursement style. That means you will put the capital out first to get through phase 1 or phase 2 of renovation. And when it's done, you'll show me photographic and video evidence that those items on your scope of work are completed. And when I feel comfortable, again, if you give me good photos and good video, I'll get you your money in 24 hours. It's a very fast turnaround as long as you did what you said you were going to do in terms of that scope of work for the renovation. Now, again, how does this program work? Same type of scenario I just described for the other two programs, okay? Same $100,000 acquisition, same 40,000 renovation, same after renovation value at 200,000. Okay, I'll lend 140, right? That's 140% loan to acquisition. It's 70% loan to ARV. All right, you could borrow less than this if you want, but this would be the maximum, and it could be the maximum because it's 70% of the 200,000, but it's also 100% of your acquisition and 100% of your renovation. I won't lend you more than 100 and 100. Your down payment, 0. Okay, but that doesn't mean you don't have to bring any cash to closing. Your closing cost, $47.50. Again, just an estimate, but it does include your loan fees and your title and escrow costs. Now, I do need $10,000 from you, right? And I'm going to point out again to the very, very, very bottom of this rate card, 100% for program 3. That means I need 100% of the renovation budget in escrow, but I'm going to take a minimum contribution from you as the borrower of 10% of the acquisition. So that's 10,000 in this scenario. Remember, your acquisition price is 100,000. 10% of that number is 10,000. So to close, you will need 14,750. That's just your escrow contribution and your closing costs. Okay. Now, the total cash you need to complete this deal is 24,750. Again, where did I come up with that number? That's your closing costs. That's your initial renovation contribution to the third-party escrow account. I will give that back to you, right, when the renovation is complete. But then also keep in mind, you need another 10,000 or some number like that, right, to get through phase 1 of the renovation. That's when the reimbursement style draw comes in, right? So we close on the deal. You've put 14,750 in this scenario, and then you will put dollars out of your own pocket, not from the escrow hold, to complete phase 1 of the renovation. Okay, so that's where your 24,750 number comes in. But once you get renovation phase 1 completed, I will give you renovation dollars back, right? So you were in for 24,750, then maybe I gave you 10,000 or $15,000 out of the hold I've got for you, out of that loan amount. Okay, you get some relief, right? Then you complete phase 2. Then you can draw down on the escrow hold again. Then you complete phase 3, and so on until you get the renovation 100% done and you've exhausted the loan funds. They're all in play now. I hope that makes sense, but happy to answer any specific questions. Dave or Steve, did we have any specific about that before I move on to the rental programs?
I don't see anything yet.
Okay, sounds good. Let's move on. So again, those who I just went over were the short-term, high LTV, high interest programs for distressed property or quick closings or whatnot. I do have rental programs for folks that are on that BRRRR or own already properties that they have other private lenders using, and maybe they can't get that conventional rental property on the back end to pay off the short-term debt. I have those programs available, but these are the total opposite end of the spectrum. These are very low loan to value and much lower interest, right? These are permanent long-term type loans. Again, my rate sheet available for download right on the website anytime. And also I might add that these programs change very seldomly. I mean, seldomly, like once in a decade. Okay. Remember, we're not tied to the government guidelines. We're not tied to Fannie Mae. We're not, the economic factors at play don't help me come up with these interest rates. I simply make these interest rates up internally with my team based on, what is a competitive rate that is stomachable for the borrower and stomachable for the lender, right? Because the lender's doing this to make a return, and you as the borrower are doing this to make a return. So the loan terms, much longer term, right? I have a couple of balloon programs, right? The 5 and 10-year balloon where the amortization schedule is longer than the term of the loan. And I have a couple of fully fixed options. Okay, so keep in mind the difference between the amortization and the term. My next slide I'm going to show will break those down visually for you. As far as the rate and the APR, we went over that before. It's the true cost of the capital between the two, right? The rate is the note rate, and your loan fees built in, amortized across the term of the loan determines what the APR and just expresses it as a percentage. These payments, again, based on 100,000, and understand that these are amortized. So they do include some portion of principal and of course your interest portion. Loan to value, again, important, right? And there are a couple of different steps there, or a couple of different options. I point you to the bottom right of this rate card. The 65% loan to value is applicable for purchase money. And if you're one of those non-recourse borrowers, which is a lot of folks that use this, right? They're using a self-directed IRA to buy a rental property. 65% is the highest in the industry. Most folks that are making non-recourse loans are doing it at 60% or lower loan to value. So I'll go to 65 for purchase money, brand new purchase for you. If you already own the property and you're just simply trading the debt, rate and term refinance, I can go to 60% loan to value. And if you already own the asset free and clear, I can go to 50% loan to value. So I've got a lot of folks who, maybe bought a rental property several years ago. They paid cash for it maybe, or they paid it off now, and they want to start leveraging and using that rental property to start getting into flipping, or maybe buy the next rental property in cash. You can come and borrow cash out refinance against that asset and then use it for whatever you want. I'm not going to ask about what you're doing with the money. I don't care, right? It's 50% loan to value. So utilize your other assets to leverage yourself to be able to do additional deals. A little bit longer term here to close these than the renovation loans. And the reason for that is that an appraisal is required. We use an appraisal management company, just like a bank. It's completely third party. I order it online, but that appraisal, including the complications due to COVID, running us about 14 to 20 days. So the 21 to 30 day time frame is extremely fast, especially when you compare it to bank financing, which I literally don't see a bank getting a deal done in less than 45 days. That's so painful to even say. So we're 21 to 30 days on these type programs, and that's primarily due to the time to get the appraisal back. Our loan fees, okay, pretty standard 2-point loan origination fee, and there is a minimum, right? So that $1,750 comes into play with a loan amount of $87,500. You borrow less than that, you pay the minimum. You borrow more than $87,500, you pay 2 points. Right? These fees are collected upfront at the close of escrow. They're included as part of your closing costs. The rest of the fees are pretty standard, but I did want to point out that there is an additional surcharge for lower loan amounts, right? Most lenders doing these non-recourse or rental long-term type won't even touch a loan amount under 100,000. We're willing to go as low as 35, and we're able to do that because we shift that servicing cost to the borrower. So you need to add that $20 flat fee to your monthly payment for loan amounts that are under $75,000. Loan amounts over 75, no problem. The lender will absorb the servicing fee to pay that middleman, that loan servicer who collects the payments from the borrower and remits them to the lender. Okay, moving our terms and requirements down here in the bottom left. Note that there is a debt service coverage ratio, okay? And I look at it a little bit differently than the 1.35% is kind of the standard way DSCR is expressed. I like to look at it as, hey, what's market rent? Okay, market rent's $1,000. Well, then your maximum allowable payment is $750, which is 75% of market rent. So be advised. Sometimes when people want to use that 15-year fixed loan on a high property tax state such as Texas, we run into some DSCR problems. We will still make the loan, but we may have to lower the loan amount because we need to get that payment under 75% of market rent. There's a 2-year interest guarantee. This is kind of like a prepayment penalty, and I'm going to dive into that. Here's an amortization schedule, right? This happens to be my 5-year balloon program, right? That carries an interest rate of 5.95%. So the interest guarantee, right, is simply the cumulative amount of interest paid over 24 months. So you don't borrow these longer term programs if you plan to pay off within 24 months. Because if you do, you could have a painful prepayment penalty, okay? So the way you need to look at these programs is, hey, I'm gonna take this loan out, I'm gonna make the regularly scheduled monthly payment for 24 months. And if I do that, I will have already paid the interest guarantee. And therefore, I can pay off at any time without penalty. As far as the balloon payment, a lot of folks ask me about that as well. It's a large payment, paying off the remaining principal balance. So in order to get that lowest interest rate, right, that 5-year balloon that carries the 5.95%, right, you'll have a very low payment as if it was amortized over 30 years, but you'll be paying down very little principal during the first 5 years of that loan, which means at the end of the term, you end up with a large payment. Now, most people don't write a check to just pay that off, but they refinance the debt. You can do that with us or another lender. Maybe perhaps by that time you're able to qualify for a conforming loan and you can pay this off and get a lower interest rate, higher loan to value loan. Or perhaps you're ready to sell the property by then. And at the sale, you pay off the loan balance at whatever time that is. All right, so that will describe then to you for our interest guarantee and how that works, as well as our balloon payment programs. I'm not going to spend too much time on our bridge loans and our new construction loans, but just do know that for those folks that are buying a great deal but have no intent to actually improve it or renovate it, we have some bridge programs that basically the difference between these and the renovation is that there is no interest guarantee. And I even have that short 3-month program where there are no payments required during the term of the loan. Again, if you're interested in those details, we can have a conversation offline, or you can always find that rate sheet right on the Marshall Reddick website. I also do have some new construction loans, very high loan to value. If you own the land, right, I will lend up to 100% of your construction cost, so long as it's no more than 70% of the after construction value. Again, those terms are rates and terms, and that rate card are available at the Marshall Reddick website, should that be something that you're interested in. Now, I'm going to get to the frequently asked questions here shortly, but how do I apply? Okay, also done very easily right on the Marshall Reddick website. Okay, so if you hover over borrow, right, and instead of clicking loan programs this time, you click on loan application, right? Super simple. right? And then you click on the private financing white rectangle. Don't get confused. See the conventional on the right-hand side. Marshall Reddick does not make conventional loans. That will just take you to our preferred conventional lender. So you would see that if you play around on the website. But this is how you do it. And our loan application is nothing like a 1003 that the bank is going to present you with, that for those sophisticated borrowers with a crazy credit profile like Dave's, like mine, like folks who've got a lot of deals out there. I mean, it would take you a year to fill out that 1003 if you could even possibly do it. It just like breaks the bank's underwriting system. Okay, so our loan application, it asks very few questions about the borrower, and everything is related against the asset, right? The collateral property, the deal, because that's what we're doing here in our collateral-based approach. So when you click on this white rectangle for private financing, it dives you into a 5-question questionnaire, very simple, very user-friendly, and dumps you into the loan application. This loan application should reasonably take 15 minutes. Again, can be done completely online and e-signed. And after you complete the loan application, an analyst from my team will receive that and will reach out to you literally within 60 minutes. Okay, that's the goal, because everybody understands that time is of the essence. And there'll be a request for additional documentation as needed, and we'll get you into underwriting. We'll get you your opinion of after repair value. We'll touch base with title and escrow and all of those things that your lender should be doing immediately upon receipt of loan application. So some frequently asked questions, and we'll open up the floor to the listeners and of course, answer any questions that anybody may have. So pre-approval. Absolutely. How do you get one, right? It's the key to getting your financed offer on the table. Now, some folks write up their offers as cash, right? Even though they're planning to use a private loan. I'm fine with that. Just know that, some of those real estate agents really hate when you do that. So if you do, just know that I'm cool with it, but be prepared for some of that backlash in terms of getting an addendum done down the line. But if you do want to put in a financed offer, just ask me for a pre-approval letter, right? I can get you one very quickly. Here are the items, however, that I need in order to provide you with that customized professional pre-approval letter. I'm going to need a copy of your driver's license or passport, right? I need to know who the principal signatory is. If you're borrowing in the name of an entity, I need the entity docs. Right? So if you're putting the cart before the horse and you are trying to make an offer and you don't have your LLC created, back up, right? Because I do need, if you're an LLC borrower, for example, I'm going to need your articles, your operating agreement, right? And of course, I'm going to need your tax ID information. So you got to give me a W-9 or your IRS SS-4, which is a document the IRS granted you your tax identification number. So get those to me ahead of time, right? Because people, on the fly making offers and, trying to swoop up a deal, just make sure that you email me your articles, operating agreement, your tax ID number, your driver's license. I'll hold those on file. That way, whenever you're starting to make offers on the fly, just send me your most recent bank statement in the name of the borrower, right? And send me the type of loan you need and your subject property address and your offer price. If you give me those over email, over text, over telephone call, whatever you prefer, or if you give those to any member of my team and you give us 60 minutes, we can simply produce one of these. Again, super professional, super clean, customized to the property address, customized to your offer amount to help you get your offer accepted, or at least give you the best chance of doing so. And if you're working with a listing agent and your buyer's agent, right, encourage them to call me, right, or to call whoever is listed at the bottom of your pre-approval letter. We will gladly answer the phone. Yes, I've talked to Dave Day. Yes, I've looked at his profile. Yes, I have his loan application. Yes, I will close the deal on time, right? I'm going to make that listing agent feel really good about accepting your offer, right? And that's half the battle to getting your foot in the door. So that's how you get your pre-approval letter. I get this question, right? How does Marshall Reddick determine the rates and the terms of the loans offered? I mentioned this earlier. I make them up. right? I think they're very competitive from a rate standpoint and from a fee standpoint, but I do that because I want to attract the best of the best borrowers, like Dave, right? Someone with a massive track record, someone with experience, right? Someone who, when the going gets tough, they're not going to scatter, right? They're going to stick in the deal, and they're going to make sure that their lender, who they trust and who trusts them, gets made whole, right? So again, our rates are not tied to any type of government indice or LIBOR or anything of the sort. Can I get a non-recourse loan as a non-retirement account individual or entity borrower? No, you can't, but you can still borrow as an entity or an individual. You just don't get non-recourse status. We talked about that earlier. It doesn't mean I require a personal guarantee, but non-recourse status is only available with Marshall Reddick when legally required. Can I negotiate the terms of the loan? Don't ask me that for a borrower on loan 1, 2, 3, or 4. If you do, I probably hang up the phone, right? I know everything's negotiable, but my rates and terms are not upfront. Once you become a reputable borrower like Dave, sure. Does Dave ask me for some special stuff once in a while? Absolutely. But you know what? He usually doesn't. And he doesn't because the rates and terms and loan to values are already awesome, right? And he appreciates the speed in which I get the deal done, right? Haggling over a few bucks on the loan fee doesn't do you any good when you stand to lose on maybe a $25,000 or $50,000 rip on some off-market property that you're going to get, right? So remember, speed and access to the relationship capital, way more important than a few bucks on the rate or on the loan fees. Does Marshall Reddick service the loans that it originates? We do not. You need a special license to service. We don't have it. Maybe sometime in the future we will, but we work with a couple of unrelated third-party servicers. But our short-term loans, right, the renovation loans or the bridge loans, there is no third-party servicer. The borrower simply makes their payment directly to the lender. Marshall Reddick will facilitate as a customer service agent, right? Because you don't talk to your lender and your lender doesn't talk to you. You talk to Marshall Reddick as the servicing as the customer service agent. But the long-term, the rental type programs, those always have a third-party loan servicer with a nice, cool website where you can put in your banking information and set up automatic monthly payments and get your year-end tax paperwork and all that kind of stuff. Hope that answers the loan servicing questions. And where does Marshall Reddick get the money to originate these loans? It's a good question, right? Well, I wish I could say that Patrick Prunty had gazillions of dollars, but I don't. I'm trying to get there one day. But the bottom line is that they come from two sources. Number one is we have a fund, right? It's called the Marshall Reddick Mortgage Fund. This is a 506c general solicitation fund. But I also have thousands of direct lending capital partners. And these are just private folks, family offices, hedge funds, whatever. These are folks that do not want to get into my mortgage fund as a shareholder, but prefer to actually hold the paper. Okay. So it doesn't matter for your perspective as the borrower. The rates and terms don't change. My fund or my direct lending partners, they don't negotiate the rates and terms either, right? We establish the guidelines. We establish the loan terms. They are what they are. But when I take your loan application and I underwrite the deal and we come to terms and we've got a viable deal, what do? I go shop that loan on my marketplace to either one of my direct lending partners or my fund. In either case, the deal gets done and it gets done on time. But important for you as the borrower to understand that, because I don't want you to get to docs and be like, who's the, P Squared Holdings 401k trust that's the lender listed on my documents? Doesn't matter. You're getting the money at the same rates and terms that you wanted. Just understand, where does the money come to fund these loans? All right, so here on the screen is the contact information for my Newport Beach-based lending team. I'm in the Newport Beach office every day. These are my team. These are very intelligent, very fast-moving, very experienced underwriters, analysts, and loan coordinator, right? So I'm a busy person. I'm on the phone literally 24/7. So if you can't get me, feel free to reach out to one of my staff. They are all, again, well educated, well versed in how this all works. They've been a part of the thousands of deals that we've done over the years, and will be able to help you on the fly if I'm unavailable. Well, that's all I've got for this program. My contact information's on the screen. Perfectly happy to have one-on-ones with you when you'd like. I hope you found the presentation today informative, but I certainly open to additional questions and comments from the crowd. Thank you.